So Bitcoin is, I think, the most well-known example of an open or public blockchain, right? It gets a lot of attention and it's got about a $40 billion market cap. What I find really interesting and what we focus on at Coinbase and GDAX, our exchange platform, is that there are actually dozens, if not hundreds, of these digital assets out there. That each one has kind of a unique value proposition, and our focus is on helping the public, anyone, really be able to access and interact with these blockchains.
New ideas and new technology should get us excited. But you know that excitement always needs to be balanced with common sense. And that's especially true when it comes to the big new things, the things with the potential for a huge financial gain or a huge financial loss. Now, one of the biggest new things in the investment world, of course, as of recent day, is digital currency. And of course, the whole blockchain technology behind it. It started with the Bitcoin rally and has been big news. And during this last couple of years, the demand for other digital coins that use the blockchain format is surging. But before you get caught up in all the hoopla, it's important to examine the details and to put things into historical perspective. We're going to do just that today with the help of an expert in technological trends, Terry Brock. It is time to tune out the hype and focus on the facts, facts that matter to you, the income generation. Let's get started. Get ready to separate reality from myth.
With us, David Scranton.
David Scranton.
David Scranton.
David Scranton.
But David Scranton says, hey, not so fast.
How does it affect the markets? How does it affect the economy? Thanks to efficiencies in new technology and a staff of veteran analysts and portfolio managers, Sound Income Strategies strives to set new standards and bring institutional style investing to your portfolio. Hello everyone and welcome to the Income Generation. I am the once again white shirt wearing David Scranton. I mean, let's just face it, it's too hot here in Florida in the middle of the summertime to be wearing a blue blazer. You know, I often point out that there are two basic emotions that control people's investment decisions: fear and greed. And that's not a knock at all against human nature. It's just a fact that we're all wired this way. When times appear to be good, we want to get as much as we could possibly get. When the tables start to turn, we want to get out before we can get hurt. This human factor is largely what causes speculative market bubbles. It's also what makes them so incredibly risky. Speculative bubbles are especially common in the technology sector. Everyone wants to be in on the next big thing. And you know, there's a lot of big speculation right now going on about blockchain, digital coins, and all the tech startups that are selling them. We'll talk about all that today with our special guest, Terry Brock, an expert on social media and technology trends. And as always, we'll check in with other financial advisors in the field in our Financial Advisor Roundtable. But first, let's talk more about the double-edged sword of speculative market bubbles. You know, digital currency isn't all that new. In fact, it's been used for years in online fantasy games. But the creation of digital currency without a central issuer has real market value, and that is fairly new. And it's starting to turn a lot of heads. More and more tech startups are selling digital coins to bypass traditional financing methods, such as venture capital, credit cards, etc. What's generating even more excitement and speculation, however, is the blockchain. The blockchain is the technology pioneered by the creators of Bitcoin that made digital coins a reality more than 4 years ago. The blockchain is essentially an online ledger that tracks and records every single Bitcoin transaction, preventing the possibility of coins being respent or reused. As our guests will talk about in just a bit, the blockchain is especially exciting to speculative investors because the technology has so many other possible applications. Some are comparing the blockchain's potential impact to that of the internet in the early days. And all of this excitement is certainly evident on Wall Street. According to Bloomberg, digital coins tied to the blockchain platform that are issued this year have on average more than doubled in price since the trading started. That's since the beginning of this year. There's been overwhelming demand for coins, says Ron Quaranta, chairman of the Wall Street Blockchain Alliance. A lot of it is based on speculation and traders looking to make a quick gain. But there's also a fundamental driver, which is the anticipation that digital currency market is maturing. Now, that may or may not be true, but many believe that it isn't quite mature yet. In fact, many think that it's far from it, and as a result, the volatility in this emerging market can be extreme. Most of the apps and websites dealing in digital coins are still only in the development stage. According to Bloomberg, one closed-end fund dedicated to blockchain markets saw the coins that it sold double in price in 5 weeks and then subsequently fall by 35% in 2 days. So naturally, the question in the minds of many right now is this: Is all the investor mania and hoopla surrounding digital currency and the blockchain similar to the mania that led to the dot-com bubble 20 years ago? And more importantly, could it play out in a similar way with the bursting of a speculative bubble that triggers an historic stock market crash? Well, obviously, no one knows for sure. There are some similarities of what's happening today to what was happening 20 years ago, but there are also some fundamental differences also, as our guest will talk about in just a moment. The most important thing to keep in mind from an historical perspective is this. The human factor seems to cause each generation to have to learn from its own mistake. If you're in your 20s or 30s right now, then you were just a kid when the dot-com bubble burst and the market fell by nearly 50% from 2000 to 2003. Odds are you don't remember the pain and worry that might have caused your parents, probably because they shielded you from it. But if you're one of those parents now in your 50s or 60s, odds are that you do remember that pain and worry pretty well. You might even have had to live through it again when the real estate bubble and the next major market crash occurred from 2007 to 2009. The point is this: you certainly don't have to risk living through it again. And while it's great to be excited about new technology, when it comes to investing within 10 years of retirement, it's important to balance that excitement with the facts, with the historical perspective, and yes, with good old-fashioned common sense. But right now, let's welcome a man uniquely qualified to teach us more about this brave new digital world and the whole blockchain situation, Mr. Terry Brock. Terry Brock has been speaking, writing about, and coaching businesses on emerging technology since 1983. He was the chief enterprise blogger for Skype and the editor of AT&T's Network Exchange blog, and his emphasis on the practical, real-world applications of new technologies for both business and individuals. Terry, welcome to the show.
David, it's an honor to be here with you. Let's make some magic today.
Sounds good to me. So let's start with, why is there so much excitement about this blockchain technology? You know, what is it and what causes this excitement?
I think it's because it shows so much potential and we're seeing real-world applications. It gives us the chance to address a lot of serious issues in finance and the kind of things that you do, helping people to plan for retirement and to take care of their financial goals in the right way. The blockchain does it better than we've seen before.
And I think the idea, if I understand correctly, is that it's to do it cheaper, to take out a lot of the financial middlemen, a lot of the financial intermediaries that get involved in a transaction, so that you're actually going direct to the end user and able to purchase goods and services with whoever will accept Bitcoin or whichever currency we're discussing. Is that pretty much it?
Yeah, that's a big factor because we can save a lot of the transactions. Anyone that has dealt with international transfers of money knows, hey, there's huge amounts that the financial institutions will take. And we find that that just is really out of sync with where we are today. Much like email is a way we would send a lot of messages fast, we wouldn't send a fast message via writing it by hand and putting it in the mail. That's what we had to do decades ago. Today, the blockchain offers a lot of possibilities. And the number one is money, but there's also other applications as well.
So, you know, it's interesting because people, you know, when you look at what's going on today with the whole blockchain bandwagon, you know, there's a lot of speculation happening today because this could be like MasterCard and Visa was years ago, where somebody came up with this idea that in a while we'd all be spending money with these little plastic cards. I'm sure a lot of Americans, when the idea first came out, thought those people were nuts, and now we hardly carry any cash in our pockets anymore. So it could turn out to be that way. Or it could turn out to be potentially like, you know, the tulip mania, where tulips were used by the Dutch several hundred years ago as currency, and then it quickly went to zero. Is it really just primarily speculative investors today that are using this? And what do you think about its future?
I think the future looks really good, and it's not based on speculation. Speculation is there, and of course we wouldn't recommend anyone put money into blockchain, a Bitcoin, or any of the other alternative coins, the altcoins, unless you can afford to lose that. But we're seeing some solid reasons to do it. It's a much more stable system than having to trust a third party that maybe is okay, maybe is not. We find the blockchain has some serious reasons why it is good, and Bitcoin is the most notable and widely recognized feature of that. But blockchain is a way to keep an unchangeable record that is monitored by lots of people, literally millions around the world, and we know that it's going to be safe as we move forward, that we'll know what happens.
So one benefit is it could save you some money on a transaction because it eliminates middlemen. Another one is it keeps a permanent, unique record. The currency cannot be reused. What other benefits in simple terms exist for individuals that want to use something like Bitcoin as currency?
I think it's because it's based on a fundamental principle that we know will not change, and that is mathematics. You know, we have people in charge of central banks, like here in the United States, Janet Yellen, who I'm going to assume is a nice person and very smart, knows what she's doing, but she and the other governors are not perfect. They make mistakes. They do things wrong, and they're even with the best of trying they can. With mathematics, which the blockchain is based on, that is immutable, cannot be changed. If you and I engage in a transaction, it cannot go back. We cannot go back later and change it, because if we try, others all around will see, oops, something's wrong here. Something didn't quite work. And all the computers will notice that. So I think we've got some extra trust that's there, and the speed in interactions, and a pseudo anonymity. It's a little bit more hidden. It's not completely anonymous on something like Bitcoin, but we have a degree of anonymity that is welcome in today's world.
Sure. Now, I know you said it's not speculative per se, and of course, you kind of put a disclaimer on that clause, and I appreciate that. But, you know, to some degree, it is speculative, obviously, because, you know, is this really going to take off? Is this going to continue to be as popular? Is it going to become widely accepted, or is it not? To me, that's where the speculation is. But I believe what you're saying is you think that of various speculative technologies, I think what you're saying is that you believe that this is probably a pretty wise bet if you were a gambling man.
Yeah, I think so. And it's kind of like what you were talking about earlier about the internet. The internet looked a little precarious back in the 90s. We wonder, is it going to be there or not? Well, obviously now we can look back and go, hey, it'd be great, David. Matter of fact, you come on up here to Orlando with me, hop in my time machine. Let's go back then and we'll know where to go. But now today we can just see what's happening, that we've got a lot of opportunities with it. It is going somewhere, and we've got some sound financial principles. Why? It's something that we've seen go up. Like, for instance, last year on December 31st, Bitcoin was around $970 some. Today, as we're doing this recording, it's in the 2,700.
I know, it's triple. It's crazy. Terry, stick with us for just a moment. We have to take a commercial break. Stay with us also, our Income Generation members. When we come back, we'll talk more about Bitcoin, but also different types of financial elements much like that. So stay with us. We'll be right back. If you're not using someone who's well-trained in fixed income and you're born before 1966, it may just be time for you to break up with that advisor and move on. I would suggest someone who will care for you through these important years of your life. If you need help finding someone, call or write us. I'd also like to remind you of the special report entitled The Income Generation. This is available free to you, our loyal viewers, online. If you haven't downloaded your report, pick it up after the show. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation, again, those born before 1966. I'm David Scranton, and you've been watching The Income Generation. Welcome back to The Income Generation. I'm your host, David Scranton. Now, although we're looking at a very specific area of the market on this week's show, it is always important to consider things within the broader framework. If you're a regular viewer, you know we've talked a lot about the stock market in general being wildly overvalued in relation to real corporate earnings today. But bear in mind also that annualized GDP growth for the first quarter, annualized GDP growth was only 0.7%, which is a significant decrease from the 2.1% rate of growth in the fourth quarter of 2016. Now compare those numbers to the fact that the Dow is up 7.4% since the beginning of the year, and the S&P 500 is up 8.6% since the beginning of the year, and the NASDAQ's up 15%. The point is that investors in digital currency and blockchain technologies aren't the only ones speculating these days. As I've discussed before, you could argue that big investors in every sector of the market have been speculating since November about Donald Trump's success pushing through his economic agenda. As of now, however, that speculation still appears to be based mostly on optimism, despite almost nonstop turmoil and setbacks from the White House. Optimistic that their overvalued stock prices will eventually be justified by a GDP growth rate of much closer to 4%, as of course President Trump has promised. As I put it before, Trump's value has been factored into the market prior to his having any actual economic impact. Speculatively, in other words. But as I've also mentioned, all this optimism might not be as great as it seems when you consider one more detail, and that is that the 10-year U.S. government bond, the 10-year Treasury rate, has actually fallen since the beginning of the year from 2.44% to 2.15% as of this time in June. And of course, that means that money has flowed into the bond market and bond prices have come up. So not everyone is putting all their faith in stocks. There's really money going into all sectors of the market, stocks as well as bonds. And that's the kind of detail that some financial advisors might overlook if their business model revolves mostly around stocks and stock mutual funds. But it is an important one to consider if you are part of the income generation, if you're over the age of 50, or if you're within 10 years of retirement and haven't yet taken the steps to lower your market risk. But right now, let's bring back our special guest today, Terry Brock. Terry, thanks again for sticking around.
Nice to be with you.
You know, when you're talking about Janet Yellen, I thought for a moment you were going to go into the fact that, you know, Bitcoin and these digital currencies seem to say that there's a finite number that's issued and it can't change, whereas the central banks around the world with all the fiat currencies just have the printing presses and they're cranking out all the money. And I thought that's where you were going with that. So tell me, how important is this finite element, if you will, around?
I think it's critical. Yeah, I think it's critical because we've got the way it was set up with Bitcoin particularly, you've got 21 million Bitcoins that can ever be produced. And they're not all produced right now. They're being produced as people create them. They're called miners after the idea of mining gold, but they're actually calculating a lot of very complex equations. Whereas you flip it over to the central banks and they are trying really hard, but in a way, David, it reminds me of kind of the old Soviet Union. You know, they would get really, really smart people who are really care, and they try to figure out how many pencils do we need for the month of February in Moscow. And eventually they would either produce too many or too few, and the marketplace was stifled. It was really the black market was the free market. Today, we look at what they're doing, and we've got over $20 trillion as we're recording this now in U.S. debt, let alone Lawrence Kodikoff, one of your guests that you had before, told us it's really over 200. And I think people are looking at that thinking, we need something that's a little more reliable. And so they're looking at mathematics. So mathematics that cannot be changed.
So if there are 21 million coins in Bitcoin, for example, and they're worth 2,700 apiece, the Rain Man in me says that equates to somewhere just shy of $60 billion of total market worth right now for Bitcoin. So I guess my question is, that certainly isn't nearly enough to replace the currencies around the world. The amount of money outstanding today is much, much greater than that. So do you see these things just being one of the currencies that people use to exchange for goods and services, or do you see it eventually growing to a point where it can actually take over and be the primary currency? Because given these numbers, it doesn't seem like it could do that.
Yeah, you raise a very good case there because we don't even have all 21 million right now. They're scheduled to come later. But what will happen is the price can go up. I think we're going to see a diversity, and so that some people will want euros, some US dollars, renminbi, or whatever, as well as Bitcoin and other digital coins. There's competition there, so that if Bitcoin doesn't do as well or has some problems or doesn't have features that other coins like say Dash or BitShares or some others won't have, people will be able to do it in a free market way, which is much more reliable and dependable than some government control. And I think that's what we'll see happen in the long term.
So that brings me to my next topic then. From my understanding, the second player there in terms of popularity is Ethereum. That's come out. And could you speak to our income generation members and frankly to myself in your own words about the differences between Bitcoin and Ethereum, and why has Ethereum's popularity really taken off?
Ethereum is doing very well. It was created by a Russian immigrant to Canada, and he put this together so that it can not only take care of money, but it also has a real strong component with contracts. so that we can then start writing contracts and be able to know what we're going to do, what you say you'll do, what I say we'll do, and it's stored in something that cannot be changed. Ethereum is a good competitor to Bitcoin. It was up as of this recording. Today we saw a significant drop in it, but I think if we live by how is the stock doing today, you know this better than I do, David. If you're living on, oh no, my stock lost 3 points today, oh, tomorrow it'll be up a couple, we're going to be in trouble. Long-term, Ethereum has some real stickability, and I see Ethereum addressing a lot of the issues that Bitcoin does, but also I think it'll have some additional features, particularly in the contracts area.
Yeah, it seems like most of the major financial institutions and Wall Street firms seem to be backing Ethereum, almost to a point where it makes me wonder if they were somehow behind the initiation of it. Were they behind the creation of it at all, or is it just that because it's contractual feature, they feel like it's a better alternative than Bitcoin, for example?
I don't know all the privy things that went into it behind those that created Ethereum and Wall Street firms, but I do think that they're looking at it. They want something that's going to be reliable. And when we can find something that is trustworthy based on, again, mathematics, then we know that it's something that we ought to look into and be aware of.
Now, is there room for more than one? I mean, let's say that, obviously, if this whole blockchain technology really doesn't take off when it comes to virtual currency at all, then all these companies are basically going to eventually disappear. But assuming that your crystal ball is right and it comes through, is it that one's going to float to the top, or do you see that there's room for 4 or 5 of these, just like we have MasterCard, we have Visa, we have Discover, we have American Express? What are your thoughts?
Well, I wish my crystal ball were working a little better. I think the batteries are out on it today. But I can tell you what I think could happen and what possibly will. I think we're going to see competing currencies. Bitcoin is the dominant force right now as we're recording this. Ethereum closing in a little bit. But I also see advantages and disadvantages in a free market way with others. So there might be the Terry coin. There might be the David coin. And we could all have our own coins that do certain features and certain activities. Right now, we've got probably over 1,000, and there'll probably be even more coins that are out there, each of which addresses different areas of the market. And I'm a big believer in the free market. Let it run rather than trying to trust really, really smart people who really, really, really care, like the Soviet 5-year plan, and let the free market, with its trillions of decisions that are made every day, decide what's going to happen, give us vehicles and tools like the altcoins as well as Bitcoin.
Of course, of course. In the last 15 or 20 seconds or so, we're not going to hold you to it, but I'd like you to go beyond just this blockchain technology. I know it's one of the things you think is maybe the big next thing, but what else? What outside this technology right now would you recommend that people look into if they've got a little bit of money with which they're willing to speculate?
Can I see your 20 seconds and raise it to 20 years? I got a lot, but I look at things like drones. They are doing incredible things, particularly outside the U.S. The FAA is curtailing a lot that's going on in the U.S. I see 3D printing. I mean, we've got 3D printers up on the space station. It's a much better way to manufacture in many cases. I also see a lot of other technologies that are emerging right now that are enormous. So I'm very optimistic on technology and where we're going.
The drones are really interesting, see? So you not only look like Jeff Bezos a little bit to me, but you sound like Jeff Bezos with the drones. Terry, thanks so much for joining us today.
Thank you, Dave, very much.
Coming up in just a bit, we're going to be talking more about today's topic with some of my fellow financial advisors at our Financial Advisor Roundtable. But before that, Miranda is going to break down some of today's most important financial headlines. So stay tuned. You're watching The Income Generation.
Read David J. Scranton's groundbreaking new book, Return on Principle, 7 Core Values to Help Protect Your Money in Good Times and Bad. Discover practical solutions to the financial challenges facing today's generation of retirees and near retirees. David Scranton's approach to financial planning is a holistic system designed for maximum protection, strategic growth, and reliable income regardless of market conditions. Available now.
Welcome back to The Income Generation. I'm Miranda Kahn. Now let's take a look at some of the big stories that move the markets this week. The U.S. ranks as 18th in the world for well-being. This according to a recent survey. It looked at 50 different metrics, including health, environmental protection, and fighting discrimination. Denmark ranked number 1. If you're looking for a new job, you may want to consider Clorox, Bain, Facebook, and space exploration technologies. According to a new Glassdoor survey, employees rank the CEOs of those companies as the highest. Meanwhile, the CEO of Uber took a hit in his popularity rating. The company didn't even make the top 100. Travis Kalanick has now stepped down as Uber CEO under pressure from investors amid controversy. That includes multiple sexual harassment allegations in the company's offices. Kalanick, however, will remain on the board. President Trump's net worth slumps to just under $3 billion, according to Bloomberg's Billionaires Index. Some of his properties have shown a decline in profits since his inauguration in January. Home resales rose unexpectedly last month to more than 1%, according to the National Association of Realtors. Sales are now at the third highest monthly level in a decade. And for much more on these stories, please visit newsmax.com/finance. Now back to David Scranton and the Income Generation.
Thanks, Miranda. Now that you're all up to date, let's hear from some other advisors in the field and get their insights on today's topic. Yes, it's time for another Financial Advisors Roundtable. Today joining us are David Stearns and Al Casedo. David is president and founder of Stearns Retirement Group in Watkinsville, Georgia, and has specialized in working with retirees and near retirees for over 20 years. David, welcome back to the show.
Thank you.
Al Casedo is the owner and president of CKS Summit Group in Clinton Township, Michigan. He also focuses on the specific needs of retirees and people nearing retirement, and he's been in the business now for 21 years. Al, thanks for joining us again.
Thanks for having me.
Most important thing, Al, is I was just in your town, last week, and this little Detroit Municipal Airport they call Coleman Field. I got to tell you, it's the first runway I've ever landed on where there's like weeds and grass like sticking up out of the middle of the runway. So can you do me a favor? This Saturday, can you get your lawnmower? Can you go over there and just kind of mow that for me so that next time I come, I don't have to deal with that?
You know what? Here in Detroit, we're just we dare to be different, man. I think we're just gonna let the grass grow.
You dare to be different. Okay, let it grow. Okay, sounds good. I'll have to get blades attached to the landing gear.
Absolutely.
So, Al, seriously, have you had people approach you about this Bitcoin type stuff, the digital currency in general? And if so, what do you tell them?
Actually, yes, I have. I've had questions about it. We know it's been around since 2009, and it's in periods of low interest environments and volatility in markets and things like that, people are always looking for the next best thing. And so when that's been brought up to me, it's like I always approach anything as if they were asking me about gold or any of the other speculative assets that are out there. Is that it's always proceed with caution and only allocate assets that we definitely know we have no intention of maybe ever using, because any monies that go in there are monies that you're okay saying, you know what, if the music, I'm okay if I don't have a chair left.
Gotcha. Okay, that's good feedback. Can I give you some feedback too, Al? Would you mind for a moment?
Sure.
I know that you're a pretty handsome fellow there, one of the more handsome gentlemen up in the Detroit, Michigan area. And I know that you really like admiring yourself. But it's important that you look at the camera and don't look at your picture down at the bottom of your computer screen, okay? So
I
just want to give that a little bit of feedback. Now, speaking of handsome, David, same thing. I guess Al's right? You can interchange this with people coming in saying, hey, I think our fiat currency is going to get devalued because all the printing of money, so I'm buying gold. Some kind of speculation that we're going to go back to the gold standard. So I guess it's really the same thing. How do you answer that question when clients come to you and say, gee, should I buy Bitcoin? Should I buy gold? Should I buy silver?
Well, probably similarly to Al, because at the Stearns Retirement Group, we are working with retirees exclusively. And I don't have really any clients that have a lot of extra money they can speculate with. So I'm not a big fan of that type of investing in retirement. I've never had anyone specifically talk to me about Bitcoins, but my answer would be similar to that of gold. And especially the fear-mongering and the fear-based approach that I see out there. I'm not a big fan of it. I try to bring more clarity and certainty to retirement and remove the fear.
Okay. So, it's funny, you talk about precious metals, and I don't know if you guys ever thought about this, but you probably have. But, even people who talk about gold, what do we, gee, is gold a safe haven? And the funny thing is gold is less of a safe haven than some of the other precious metals, because there's other precious metals that are used for real purposes, like copper is in wire. There's an underlying demand for that. Whereas really the primary underlying demand for gold is really a luxury. It's jewelry. So, Al, beside buying gold for your lovely wife, what other benefits, do you see? Do you see the same problem I see with this? Are there other metals that you've thought in your experience that might actually be have less downside because they're actually being used, they have a real purpose other than just speculation?
Well, if you look at copper, copper we use for wiring. So copper has a use. If you look at silver, silver has always had a use, whether it be for money or anything else like that. So I always find that if you're going to go into any type of precious metal, that I like to see a secondary use for it or primary use for it, and not just on the speculative side, hoping that it just raises on just the value and the euphoria of what's happening with the investors.
Sure. So David, it's funny, you heard Terry Brock interview, we talked about, is this safe, is this speculative? And, at first he kind of said, well, it's safe. And what he really meant was that he really felt like of all the technologies that are out there a bit, two of the best technologies that have both the best potential for actually coming to fruition down the road is this Bitcoin type technology with a digital currency. And of course, the other one was drones that he mentioned. He thinks that's a real life use for those types of things in the future. What are your thoughts on that? If you were to speculate and say, hey, gee, this virtual currency has some play. Do you think this is probably a good bet if someone wanted to take a small part of their money and do something that was more speculative?
Yeah, Dave, I really do. There's probably a couple reasons why. If the government doesn't decide to regulate, somehow force their way into Bitcoin and allows it to organically grow, it looks like it may eventually become more user-friendly than gold would be. There's already been numerous incidences of people spending Bitcoin on things that we can spend our dollars on. So that to me already feels like it has a leg up. I do have some concerns about it, though. I see conflicting reports out there. They have the mega network. The computing power is more powerful than anything we've ever seen, yet some of the larger and more complex transactions can take up to 4 hours to mine. And so, that makes the dollar bill look a lot better. But I think if those things can get worked out, with $80 billion out there right now in cryptocurrencies altogether, I think this one might be here to stay, Dave.
Okay, all right. So let me ask you this then. In the 30 seconds or so we have left, guys, if I'm part of the income generation, and I am, and I've got $1 million, what's the most amount of money you'd ever recommend that I put into something like this, like a Bitcoin type technology? David, what's your number? What's the most of $1 million for an income generation member?
The most that you can afford to lose. We know that $100 in Bitcoin in 2010 would be worth $72 million today. We both missed that one. I'd say whatever you can comfortably afford to lose.
Do you have a number in mind, Al, yourself, or is your answer similar to Dave's? It's specific on the individual.
Pretty similar, right around the 5% mark there, but probably wouldn't go any higher than that.
5%. Okay, that's even more than I was thinking. Gentlemen, if you could stick around for a minute, that'd be great. And same thing for our income generation viewers. We'll be back to talk more about digital currency.
Read David J. Scranton's groundbreaking new book, Return on Principle: 7 Core Values to Help Protect Your Money in Good Times and Bad. Discover practical solutions to the financial challenges facing today's generation of retirees and near retirees. Learn the truth about Wall Street, the financial media, and the secrets they try to hide from everyday investors. This isn't just another book about investing. Working Americans who have lived through 2 major stock market crashes and the worst financial crisis since the Great Depression in the past 16 years don't need another book about investing. David Scranton's approach to financial planning is a holistic system designed for maximum protection, strategic growth, and reliable income regardless of market conditions. Stop planning for retirement with your fingers crossed. Read Return on Principle, 7 core values to help protect your money in good times and bad. Available now.
Welcome back to Income Generation. I'm David Scranton, and rejoining us now to continue our roundtable discussion are David Stearns from Watkinsville, Georgia, and Al Casado from Clinton Township, Michigan, where they have the furry runway, should I say. Gentlemen, thanks for sticking around.
Thank you.
Now, Al, you surprised me a little bit. So when you gave that 5% number, so you think it's possible that even with $1 million, let's say, at my age 51, pushing age 52 in just a couple months, that maybe even as much as 5%, as much as $50,000 could be appropriate to put in something speculative like this?
I think so. I think if you have a solid plan and a solid income plan, and you want to allocate a small portion of that portfolio into something speculative, I don't think it would hurt any. It would hurt the overall plan. I think you have to have a concise plan. You have to have a good, sound income plan, and really be backed up with pensions and Social Security and everything else like that. As far as Bitcoin is concerned, I still think there is a lot of play upside to it. Japan actually legalized it as legal currency.
Sure.
I think it has now become, it's been around since 2009. So now we know that it has some type of longevity. I do get concerned on the other side with competing cryptocurrencies. You know, we spoke about Ethereum being a possibility, and some people say that might overtake that also. So I think understanding that Ethereum is out there right now, and that's only in the 300 range right now, and they're projecting that in the next couple of years it might get up to the 700 range. So you do have some play there, and some upside. And knowing the history of Bitcoin, I think there's possibilities there. Now, it's always proceed with caution, because if they just start creating more cryptocurrencies as we go along, then when does the music end?
So David, he says, when does the music end? It's like a game of musical chairs. Tulip Mania back in the about 400 or 500 years ago now, the popular Dutch folklore, where people speculated on tulips. Actually, the price went skyrocketed of tulips, the flowers, and of course, they use those as currency. And then all of a sudden, people woke up one day and said, why are these flowers valued so much? They're just silly flowers. And the price plummeted. And anybody who was stuck holding the currency of a tulip basically was like the child playing musical chairs. The music stopped, they didn't have a chair. So, obviously, that's probably part of what you said when you said, make sure it's money you can afford to lose. Because if the music stops with all this, then I could be the guy stuck without a chair, right?
Yeah, that's exactly right. And, currency is an interesting thing because it really is more of a perceived value than anything else. I mean, we got a green piece of paper that says $100 on it. And as long as we agree that it's all worth that we can use it, it's worth $100, then that's what it's worth. But it really is just a piece of paper. And so currency is hard to know what its intrinsic value is, right? And so, that's really what a bubble is. A bubble is when a large asset loses touch with its intrinsic value. And I think it's really hard for the world to know what Bitcoin is worth. I mean, today one Bitcoin is worth $2,700. But, at the start of this year, it was worth $800. So, I think the music could end here quickly. And so I agree with Al. I would say 5% at the most.
Okay. So let's say my number was 5%. It sounds like both you gentlemen are in agreement then that if my number were 5%, I would take that $50,000 and I'd split it between Bitcoin, Ethereum, maybe some of the others, so that I didn't have all my eggs in one basket, right?
Yes.
That's right.
Okay. So Al, David's talking about, speculative bubbles, and you're a pretty intuitive guy. Why do speculative bubbles exist? Why do they occur? And why don't we learn our lessons? I get nervous about this, and I guess that's what makes me so conservative. I'm afraid to gamble on these digital currencies and to invest in them. but people have made a lot of money, and I've been sitting on the sidelines. So let's talk about speculative bubbles for a minute, Al. What are your thoughts about this, why it happens, and what people need to be careful of?
Well, there's a couple of driving factors, I believe. One of them, of course, being greed. Um, when we see something that we believe that it has incredible upside, and other things are not going well, we start looking at things and say, hey, what is the possibilities of this? So I think greed is a huge driver of bubbles. I also think that current conditions increase the possibilities of bubbles. Right now, for example, with the economic conditions of a lot of different countries and the mistrust that's going on in so many different countries, I think that in their own currencies, I think people are now looking for alternatives. So when people are looking for alternatives to what they believe is no longer working, I think it also creates the euphoria of wanting to be part of something that all of us by nature have some kind of explorer wish inside of us.
And right now, it's almost like it's part of the populist movement in a way, it seems, this whole Bitcoin thing. So, Al, we need to leave it there for this segment. We'll be back in a minute. Stick around, gentlemen. We've got to go to a commercial. And for Income Generation members, you stay with us also. We'll talk more about digital currencies when we come back. If you're not using someone who's well-trained in fixed income and you're born before 1966, it may just be time for you to break up with that advisor and move on. I would suggest someone who will care for you through these important years of your life. If you need help finding someone, call or write us. I'd also like to remind you of the special report entitled The Income Generation. This is available free to you, our loyal viewers, online. If you haven't downloaded your report, pick it up after the show. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation. Again, those born before 1966. I'm David Scranton, and you've been watching The Income Generation. Welcome back to The Income Generation. I'm David Scranton, and joining us now to continue our roundtable discussion, we have David Stearns, President and founder of Stearns Retirement Group, and Al Casedo, the owner and president of CCAS Summit Group. Gentlemen, thanks again for sticking around here. I guess, Al, I need to pay you a compliment because I did cut you off. We had to go to commercial break. I apologize. But I know you did a really nice job in the last segment, looking at the camera. But I just want to let you know, don't worry, no stress. You're as handsome as you were 6 minutes before that.
Thank you. Thank you.
You're welcome.
We're working on it.
So David, it is greed that starts these speculative bubbles. I think we're wired differently. People hear what they want to hear sometimes. And when you hear experts, people like Terry Brock coming on saying, this is real, there's a demand for it, we think this thing's going to stick, people want to hear that. I guess I'm so conservative, and I know you are too, that my mind automatically goes to all the things in the past that people talked about with certainty, and they never came true. And maybe the bubble, the price went up, and the next thing, boom, it came down to zero. People are wired different ways, and I know you're wired more like me. So how do you get your clients to look at both sides of it and not just hear what they want to hear?
Well, most of the people that come to see me, Dave, at this point come by referrals, and so they have relationships with my clients. They're actually coming to hear the other side of it in my office, that's for sure. I won't keep them from speculative investments, but I'll give them really solid advice about keeping an eye on what they can lose, things like that. I'm also concerned about the U.S. stock market, Dave. We can talk about bubbles, and I'm worried about the fact that the cyclically adjusted price to earnings ratio right now in the stock market is almost at 30, and we're sitting here wondering, can this continue on? Mm-hmm. And so I'm even having these conversations with my clients as it relates to their portfolios even today.
We had a guest on several weeks ago who actually said, I was trying to prod him a little bit about the bubble in China. And he said, bubble in China. He says, the central bank right in the United States, all the Western central banks, that's a big bubble, printing money. Right. And it seems like these digital currencies are hopefully some attempted solution toward that by making it more finite. So Al, in 30 seconds or so, tell me, what do you tell clients? If I come to you as a new potential client and say, I want to be really, really aggressive, what do you tell me? Do you take me on if I want to be aggressive? Do you tell me, I'm sorry, that's not what I do? How do you handle that?
Well, it's basically refocusing and really understanding whether it's what's our money for, purpose versus performance, and understanding that you have to have finite goals for growth and finite goals for income. And at the end of the day, most people would want to retire based on income. They're going to be using money from all the money they put away, and it's just redirecting their thoughts and educating them on what it means to be income driven when it's the time for distribution and for the time to decumulate assets.
And buying these digital currencies definitely doesn't generate any interest or dividends. So we have to take one more commercial break. Stay with us, gentlemen. We'll be right back. Welcome back to Income Generation. I'm David Scranton, and continuing to join us now are Alfredo Caicedo and David Stearns. Al, now, I didn't think you aspired to be mayor of Detroit, but you kind of answered that last question a little bit like a politician. So I'm going to try again. 30 seconds or less, tell me. I come to you as a client, and I want to be super aggressive with the majority of my money. Do you take me as a client? Do you not? What do you tell me?
We're not a good fit.
Not a good fit. David, how do you answer that question? Same thing? You take me? You try to help me and convert me?
Yeah, no, there's going to be no conversion. I think what clients love is they love honesty and sincerity, and what they want to know is who I am, what I do, what I don't do, and I just tell them right away I'm not the right fit for them.
Well, good for you. Gentlemen, I think that's the right answer. You can't be all things to all people, and the most important thing is, and for Income Generation members, the most important thing when you're trying to find a financial advisor is you find someone who's philosophically aligned with you. So if you're conservative and you live in the Detroit area or you live near Atlanta, these two gentlemen might be a very great fit. If you're aggressive, you need to go somewhere else. Gentlemen, thank you.
Thank you, Dave.
Thanks for having us.
I'd like to take a minute to thank all my guests again for joining us for another episode of the Income Generation. I also like to thank you, our new and returning viewers. New technology can be a wonderful thing. It can improve our lives. It can create new jobs. It can pave the way for even more advanced technology. The list goes on. As baby boomers, I believe most of us are more inclined to embrace new technology than to fear it or reject it. And I think that's a great thing. But there's always a potential danger in embracing the next big thing too quickly or with too much enthusiasm in your portfolio. Technology changes quickly, and it takes time for new trends to evolve and gain stability. And when that happens, some companies and corporations will emerge successful and others will fail. That can seem fun and exciting from an investing standpoint at times, because it is, but only in the same way that a casino floor seems fun and exciting. Sure, there's a chance you could win by placing the right bet on the right game, but even bigger chance that you lose. Just keep that and a historical perspective in mind whenever it comes to investment hype or hoopla about the next big thing. Thanks for watching, and if you're close to retirement and you really want to know how to help to protect and maximize your money, it's absolutely essential that you stay informed and up to date. And right here is where you can do it on the Income Generation. I'm David Scranton, and thanks again. We'll see you next week. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation. Again, those born before 1966. I'm David Scranton, and you've been watching The Income Generation.